Block released their latest quarterly figures Thursday after the market closed. Block, previously known as Square, previously trading as the ticker symbol SQ, now XYZ, is now down when the market is open on Friday over 15%. And as you can see, in the last 5 years, this stock is still down close to 18%. So yeah, a terrible performance over the last couple of years. Now, all in all, and by the way, I don't own any shares of Block anymore. All in all, if you look at the pricing metrics and the growth rates and all of that, it looks very cheap, right? A forward PE of 15.9 times. If you look at the expected growth rate, revenue growth closer to 10% or so, but EPS expected to grow much faster than that, has a market cap of $40 billion. Now, my problem with Block has always been the same. Good company, solid products, just bad management, bad leadership, more specifically Jack Dorsey. I probably think that if there is a change in CEO, this thing would have been trading much closer to $100 than $70. But that's just me. Currently, the average analyst price target, of course, that will change in the next couple of days because there are still more and more price target updates, downgrades, whatever coming out. But right now, it still sits 41% higher than the price we're at right now. And looking at some pricing metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow, compared to the 5-year mean, you can clearly see that we are way below the 5-year mean. And then the price earnings to growth here at 0.47. I mean, that's just ridiculously cheap. But then again, maybe the market just doesn't trust management anymore. So let's discuss what has happened this quarter, the good and the bad, because there is a bad as well. Let's discuss all of that in this video. If you missed all the other earnings videos, whether it's Mercado Libre, Nu, Celsius, Alibaba, those are already live on the channel. You might even find them in the top right corner. If you want to support me even further, you can, of course, hit all the buttons, like, subscribe. I would really appreciate that. And you can also check out all the links down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I first want to start off with the typical Square, Block, Jack Dorsey type of thing. And this was one of the first pages. By the way, the whole shareholder letter did change, layout did change, so it was quite confusing at first, but fine. Okay. Then, when you read these two things here, our product goals in 2025 and beyond are: increase access to the global economy for everyone, increase openness to earn trust and maximize customer flexibility, increase automation to remove mechanical burdens that get in the way of creativity. Then if you go and look at the first point, which is access, you read all of this paragraph right here. I mean, how do you expect the stock market to take this company seriously? Seriously, to me, it just doesn't make any sense. And I don't know, shareholders of this company are definitely not happy. The board, I don't know what they're doing there. I mean, how much longer does the underperformance need to continue for them to actually act? It just doesn't make sense anymore, and that's why I sold a while ago and put it all into PayPal. And I was, PayPal is not doing much better. Yeah, actually, since Alex Chris has come in, PayPal is doing much better. Now, on the positive side of things, of course, Block is still expected to grow quickly, still growing quite okay. If you look at the two segments here, Cash App revenue and Square revenue, we can see that in the last 3 years, Cash App revenue grew at a compound annual growth rate of 16.3%. Square, slower than that, 10.2%. And actually, it's been quite flat-ish in the last couple of quarters. So yeah, when we talked about Toast a while ago, I got Toast wrong because Toast is definitely dominating the restaurant segment. Definitely hurts a company like Block. Then looking at the sub-segments here, so transaction-based revenue, subscription-based, hardware revenue, and Bitcoin revenue. Now, of course, with Bitcoin, with Jack Dorsey, the whole focus on crypto and all of that, you would think that they would be the one that would have figured it out. But no, actually, it's still Coinbase and Robinhood that are the go-to ones when it comes to crypto. Now, here, as you can see, Bitcoin revenue, yes, has increased in the last couple of years, not by much. It's a lot of revenue, but it's barely a drop in the bucket when you look at gross profit. We're going to look at that in just a second. So yes, Bitcoin revenue is a lot here, $2.42 billion. Then we've got $1.89 billion in subscription and services revenue that has increased quite rapidly in the last couple of years. And then you have, of course, transaction-based revenue. Now, like I said, looking at gross profit, we look at the two segments here. Yet again, Cash App gross profit that continues to grow quite rapidly year over year. Square gross profit, not that much slower. And so, focusing on a Square gross profit, year-over-year growth of just 12%. You can see the deceleration in growth quarter after quarter. So just 12% growth year-over-year. International is growing faster, but also has seen growth decelerate to 22% growth year-over-year. Total Square GPV has grown by 10%, and that's actually an acceleration in growth quarter-over-quarter. So that is good. We can also see that Square International GPV is taking a little bit more share of the overall, GPV for Square. We're now at 19%, previously 18 and 17%. As for Cash App gross profit, here as well we see a deceleration in growth. Year-over-year gross profit grew 16%. Then if you look at Cash App monthly transactive active, year-over-year growth of just 2%, and it has been flat for quite a while. We can see that actually in just a bit. Looking at Cash App monthly transacting actives, that has increased by 9% year-over-year here as well. Growth decelerating. Total Cash App inflows, also growth decelerating, still growing 12% year-over-year. But again, you're buying this company because it's expected to grow quite quickly, right? This is supposed to be I won't call it a PayPal, but PayPal is not growing that quickly. You buy Block because you think that it's going to outgrow a company like PayPal, whether it's from Cash App or Square. Well, this here does not show me that they are growing that quickly. This has not become the growth company or the growth stock that we all knew a couple of years ago. And here, if we zoom out, we can see the Cash App monthly actives. Yes, of course, in 2021, 2022, it did increase much quicker. But I mean, it's been flat-ish since, the last 3 quarters. And even before that, it's not that it has increased that much. And especially if you compare it to Venmo, Venmo is growing faster than this. Business-wise, Venmo, the focus at PayPal, is in my opinion much better than with Cash App, with Block. Looking at adjusted free cash flow for the quarter, that was an outflow of $191 million. That's down 75% year over year. Now, if you look at the trailing 12 months, that's actually up 302% year over year. Of course, with Block, we know that in the last couple of quarters, they did shift a little bit towards, okay, now it's maybe time to become a bit more profitable. It's now time to buy back shares. It's now time to return capital to shareholders. So yes, there is that shift. Rule of 40 goal for 2026. Okay, great. But it does seem like we went from a growth stock to a normal stock that is trying to focus a bit more on profitability. And let's be honest here, profitability is still not that stable. It's improving. Don't get me wrong, it's improving. But we're far away from a free cash flow machine like PayPal. And even for the outlook, by the way, the quarter all in all double miss, right? Revenue and EPS. And then, of course, the expectations were that maybe for outlook, the outlook that they gave us, I think 2 quarters ago or 1 quarter ago for 2025, the market was thinking, okay, maybe they're going to update that to the upside, but no, it's still gross profit growth of just 15% year over year, adjusted operating income of $2.1 billion with a margin of 21%, and a rule of X, the rule of 40 here, 35.5%. They do expect to exit 2025 much stronger to reach that rule of 40 in 2026. With regards to Q1, they expect gross profit to just grow 11% year over year, adjusted operating income $430 million with a margin of 19%. And here a rule of X, rule of 40, 29.3%. The thing with Block, and that's something that we've seen in the last couple of years, is that with regards to operating income, net income, the profitability metrics have always been up and down, up and down, up and down. We would like to finally see a bunch of quarters where it's really steady on the way up and to the right. Couple of extra things here. Total GPV, which is the red bars right here. Okay, in the last 3 years, that has grown at a compound annual growth rate of 10.2%. Then if you look at Square GPV, that has reaccelerated a little bit this quarter to now 10%. We've seen a deceleration in growth, for a bunch of quarters, actually since the March quarter of 2023, that has come down to 7.5%, all the way from 16.9%. In Q4, that was 10%, so fine. We've seen the same thing with Cash App gross payment volume that has also peaked at around 23% or so in that same quarter, and that went all the way down. Well, actually, it went under 0, and now we did see a little bump up, but it's still down 22.7% year over year. Now, looking at the stock right now, we are of course under the 20, the 50 and the 200-day moving average, an ugly red candle here on the weekly. Now it remains to be seen if we respect that uptrend line. Previously it did back here in August of 2024, perfectly respected that uptrend line. Let's see if we can do that again. It would mean that the stock would go under $70, although it might find some support here at $70 that we're at right now. We're a bit in no man's land. On the weekly, we're a bit in no man's land. If we switch quite quickly to the daily, we can see that we are actually, well, oversold right now. On the daily, we are oversold. Of course, you can stay oversold for a couple of days, just like you can stay overbought for a longer period of time. So we'll see. Maybe we could see a rebound at around $65 or so. Remains to be seen. But to me, it's pretty clear. They can change the name of the company numerous times. They can change the ticker symbol numerous times. It doesn't matter. I think the market is just tired of hearing promises and whatnot from Jack. And yeah, it's probably going to wait and see what happens. It's a good company, bad leadership, and we've seen that in the past. Good companies can be destroyed, stocks can be destroyed because of bad management. Now you might say, oh, but Jack is a tremendous CEO, blah, blah, blah. Look at what he's done previously with Twitter and Vine. Yeah, exactly, that's my point. He had Vine, he basically had TikTok, didn't do anything with that. He had Twitter, completely destroyed it, let it be invaded by you know what, completely almost destroyed everything. Now he's doing, I think he's going to do the exact same thing with Block. It's just a matter of time until the folks inside of Block notice that, you know what, actually, maybe it's time to push him out. If they push him out, I think the stock goes up. That's just my prediction. So all in all, that's about it. That's why the stock is down. Disappointments, they anticipated more, and yeah, they under-delivered yet again. So all in all, that's about it. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.